On to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live rates and then do a deep dive into a great topic, which is short-term rental property loans. So we will get started here in just a few minutes. Just hang tight while we go live on all the different platforms. We are streaming this on YouTube, Facebook, and LinkedIn. So let us get live on all the different platforms, and then we will get started. Feel free to drop a comment there in the chat as you tune in. We appreciate all of the comments. So as you tune in, drop a comment there. And feel free to keep dropping comments and questions as we go through the training here. Thank you, everybody that's already tuning in early, dropping comments. Owen, Harriet, Michael, thank you for the comments. We appreciate it. Jason, thank you for the comment from LinkedIn there. We'll get started here in just a moment. Great topic here for today. Definitely an exciting one. All right. It looks like we are good to go. As you tune in, keep dropping comments there in the chat, and also feel free to drop any questions you have on the deep dive topic that we're going to go into today. But we'll go ahead and get started. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning here on this show is go through live mortgage rates for different programs and then do a deep dive into a different topic every day. Now, today's deep dive topic is something we're very familiar with here at the Mortgage Calculator and that we specialize in, which is short-term rental property loans, particularly DSCR loans for short-term rentals. We do a ton of these loans. It's something we specialize in. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a deep dive into that here shortly. But before we do that, just like we do every morning, we'll pull up our pricing tool and see what the rates are looking like this morning for some different programs. So Nick, if you're ready, let's pull up the pricing and see what the market is looking like this morning.
All right, let me switch my screen and we'll pull up the pricer. So this is our pricing tool. This will show us the general rates for today, August 31st. It's just after 11 a.m. Eastern, so all our rate sheets are live for today. This will show us the APR. If you'd like a full breakdown of all the fees that go into the APR, please get with our team members. We have over 300 licensed loan officers in 24 states. And we can do our business purpose DSCR loans, which is the topic for today, in 44 states. So for our investors, we can do almost every state. So we'll set up a demo here as we do every day and compare the same scenario across the programs. We'll set up a $400,000 loan amount. We'll set up an LTV of 80% loan, 20% down payment. We'll set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point of cost, which is a typical request. We're going to compare conforming conventional, then we'll check out FHA, which is usually the next best option. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 additional programs beyond the standard here. We also offer VA and USDA. VA is only for vets and active service members that are eligible. If you are, let us know. We can quote it. And USDA is only for properties that are eligible. If your property is eligible that you're looking at, let us know, and we will quote it, no problem. So we'll start with conforming conventional as always. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO of 760 and an estimated debt-to-income ratio of 40. So with the basic settings, as we do every day, let's check out the general rates. All right, it's about the same as it was yesterday, but again, this is down from the peak rates last week. So 7.125, 0.875 discount points at cost. Final APR 7.287. So again, a little bit down from the peak there last week when we were up over 7.5. So a good option here for our customers that qualify for conventional. But if for any reason our customers don't qualify, typically the next option we want to look at is FHA. So for the next demo, we'll set up the same exact scenario. However, we will choose FHA. FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio. but so we can compare apples to apples, we keep everything exactly the same. So let's check out the FHA rates. And again, about the same as it was yesterday, 6.375 rate, 1 discount point in cost. Puts our final APR 6.967, just a touch under 7, which is good. We were over 7 there for a little bit. So good option here, just under 7. And as you can see, if our customer qualifies for both conforming and FHA actually might be a touch cheaper. So definitely recommend our customers that are well qualified, check both options, and our customers that must use FHA for the leniency or the debt to income ratio will be pleasantly surprised. Now, if our customer doesn't qualify for either, that's where we really specialize here at the Mortgage Calculator, where many other banks and lenders only have these options. We have 5,000 other options using alternative income under expanded guidelines. So when we choose this option, everything else will stay exactly the same, but now we have an income pop-up. Full doc is what we use for conventional and FHA. So most of the times if our customers don't qualify with full doc, we would be using these non-QM programs to use one of these alternatives. So we have asset-related programs, business bank statement programs, our investor DSCR program we'll talk about here in a minute. Personal bank statement 12-month, definitely the most popular program by far for a primary home borrower. So that's our demo product that we always use. We also have RSU, stated, VOE, 1099 P&L, and no income CDFI. But we always use personal bank statement 12-month for our demo, and that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit their tax returns, may have various write-offs or just may not quite have enough income to qualify. So in this case, we'll solve that problem for our borrowers. No tax returns involved at all. We'll simply use their last 12 bank statements to determine a new debt-to-income ratio here of 40% in this example, using just their cash in the bank. No tax returns involved at all. Many times our self-employed borrowers qualify with double, triple the income, so it solves their problem and allows them to get the house they really want. So let's check the rates for our bank statement non-QM solutions. So here's the best bank statement option, 7.5 rate, 1.75 discount points and costs. Puts our final APR 7.596, so about 0.3 higher than the conventional options here for a bank statement option. So very close right now between non-QM and our conventional rates. So definitely recommend our customers that may need that extra help. It's not that much different in cost, so please take advantage. Some of these other options, a little bit higher rates and costs, may allow other things like credit events such as foreclosures or bankruptcies or other reasons where we would not qualify for conventional or FHA, which we would still qualify with these programs. So tons of different options here. In fact, hundreds of different options. Please get with our team. They'll find the best one for you. Now we'll do some live pricing for investment properties as we do every morning as well. So when we switch the occupancy to investment, we'll set up the same scenario and we'll compare our two options for investment properties. We'll have our conventional conforming options and our expanded guidelines non-QM. Remember, government programs, FHA, VA, and USDA do not work for investments. So we'll simply compare these two options. So we'll start with our conforming conventional investment property. Everything else is exactly the same as our other demos. All we've edited here is the occupancy. So we'll be able to see the adjustments the conventional programs have added for investments. And again, today, this is actually probably doable. The last couple of days, the rates have been too high to really be a reasonable cost to even be legal. But this one is probably doable. But again, our customers usually want to see other options. So best conventional option, 7.625, 3.5 discount points and cost. So quite a bit of discount points there. Puts our final APR 7.875. So most of our investors, though, would rather save this $14,000 of cost in this example in order to invest in other investments. So many of our investors would rather have a higher rate as long as their property cash flows in order to reduce those costs. Fortunately, we cannot offer that with conventional right now just because the rates are a little strange. So most of our investors, we present our non-QM options. So for the final demo, set up the same exact scenario, and this time we'll choose expanded guidelines, also known as non-QM. So the first thing we need to select here for our investment non-QM is our income option. And the most popular option by far is the DSCR. It's because it doesn't require any income or employment from the borrower. We simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows on a monthly basis, that's a ratio of 1.00 or higher. If the property does not cash flow on a monthly basis, that's a ratio under 1.00. We still have options for that. For our demo though, as we do every day, we'll do 1.5 as the highest value so we can see all the different options pop up. And final thing we need to select is a prepayment penalty. 3 years is standard for these programs. However, we have options for 0 that will cost more and not show as many programs. And same with 5 years, that will cost a little bit less, save our customers some money, but will not show as many programs. So we always choose 3 years as the standard so we can show all the more standard programs. So let's check out the DSCR options. Amazing. Still smoking conventional here, Jose. So we love it when we have non-QM options that beat conventional. It's not very often. And here yesterday we beat, or 2 days ago, we beat on both non-QM primary and the DSCR was beating. Today, just the DSCR is beating. 7.75 rate, beating conventional, 0.975 discount points at cost. Final APR, 7.816. Remember, 7.875 was our conventional APR. So today we can get a DSCR loan for cheaper than conventional. So any investor, 100% will take this DSCR loan because it's cheaper now and it's easier, quicker, better for our investors. However, even when the rates are higher, if you scroll down here, some of these other options have a little bit higher rates and costs. Most of our investors would still take this when compared to conventional for the flexibility and ease. And some of these programs may allow bankruptcies, foreclosures, and other credit events that would otherwise make our customer not qualify. And a very popular request, and a segue into our next segment here, many of these programs at a little bit higher rate and cost may allow short-term rental income to be used for our DSCR. So since that's our topic for today, let me go ahead and bring that up and we'll get right into it. So since we don't get to do the short-term rental version live on the show, our little pricing tool, our quick pricing tool doesn't allow us to select which programs allow short-term rental income and whatnot. We will have Jose go through a deep dive right now and show us some real-life examples using the programs that allow short-term rental income. So you saw the DSCR programs, there's hundreds of them. Not all of them allow short-term rental income, and obviously not the best price ones typically won't allow it. But right in there, we have a few options that will allow us to use the short-term rental income to determine that DSCR ratio. So the typical DSCR ratio is determined with the standard long-term rents, which is on the appraisal, the 1007, if you're familiar, or the 216, if it's a multi-unit. So most of those DSCR loans will take the value right from that long-term appraisal, and that's what's used to calculate the DSCR ratio. These options that Jose is going to present here are different, right? We still do the long-term rent, or we tell them to put a short-term rent on that report if possible, or in some cases, we can use a short-term rent estimator, which is a tool that we use. So I don't want to put words in Jose's mouth, so I'll let him present that. So if you're ready there, Jose, let's have you present the options that you have ready.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you this morning. So, yes, the short-term rental market is definitely the market that is popping with the investors, because not only are the long-term rents in general increasing, but short-term rentals are also increasing in popularity, and they also tend to offer a higher cap rate or higher potential income than a long-term rent will. And besides that, there are other factors that are now taken into consideration with the short-term rent, like the issue of not having to evict a non-paying tenant. As we all know, during the pandemic, that became quite an issue when that was frozen and you could not do anything with non-paying tenants. So short-term rent does offer a couple of additional operational factors there that the investors tend to love besides the high rent rates. So the beauty of the DSCR loan is, well, first of all, no two DSCR loans are created equal, right? The guidelines do change from investor to investor, which giving us many options to custom tailor these loans. And since we do like to put our consultant head on, we definitely like to look at all the options and find the best one for our borrower. And the DSCR loans do give us plenty of flexibility in how we can approach the rental income analysis portion of the equation. What we're actually going to plug in there? Is it going to be long-term rents? Is it going to be short-term rents from AirDNA? Is it going to be short-term rents from 12 months short-term rental revenue reports from a platform like Airbnb, VRBO, or combining all of them? Is it going to be short-term rents from the last 12 months bank statements for basically tracking the short-term rental deposits, right? So many different ways that we can analyze the number to get to the debt service coverage ratio that is accepted for that loan option. And the other factor to consider when structuring these loans is when we are using short-term rental income, will there be an LTV adjustment? Some of our options do not require an LTV adjustment when using short term rental income. Others do, and the LTV adjustment is usually 5% reduction. So you have to be very aware when you are structuring your short term rental loan that you're not subject to an LTV adjustment for the option that you are choosing. And usually you'll know because the ones that do not require the LTV adjustment are going to have a much higher rate to factor in for the additional risk that they are taking in accepting that type of a property into the loan package, right? Because as you deviate from the norm, you increase the risk to the package. So the investor that's buying those loans needs to have that taken into consideration, hence a little bit higher rate. So I am sharing all types of examples for you today. The first one that I'm sharing is the best case scenario, right? Our 85% LTV DSCR loan. That's a great option. That is the maximum LTV for a DSCR loan. However, in this example, we have a great property that we are able to use long term rents for and still have it cash flow. So, whether the borrower is using it for short term rent or long term rent on the loan application, this is just using long term rents. It is a purchase of a property that is most likely vacant. So, it is at the discretion of the borrower to structure it however they choose to structure it when they're applying, right? So here in our best case scenario, maximum LTV, you're looking at 9.625 as our lowest cost option, and you can buy it down to 8.499. Now, in this case, it does allow for the use of short term rental income like AirDNA or using the short term rental platform revenue reports. But if you do use those, then there is a 5% LTV reduction. So now we have another short term rental purchase at an 80% LTV, where again, we're not using AirDNA nor are we using short term rental data. So you will note here amazing rates for this DSCR option that we can use for our short term rental type property with a $600 lender credit at 7.99, and you can buy it down all the way to 7.125. That seems to be an amazing, better than conventional rate. So now, so you can get have some comparisons there. This option at a max 80% LTV does allow for the use of short-term rental data or AirDNA without an LTV adjustment. But now you will note the rates, whereas the other option started at 7.99 with a lender credit. This one starts at 9.625 with a lender credit, and the lowest rate option is 8.5%. But again, this one does not have the 5% reduction in LTV, and it does allow you to use the AirDNA. But now, if I compare this at these rates to the 85% option that gives us a 5% haircut, this one is still a better option. You'll note this one costs more at the basically 8.5 rate than this one does. So this one would still be a better option at the 9.625. This one is a little bit of a lender credit. So if you had the same scenario, if you had to pick from one or the other, you'd obviously go the 80% option without an LTV adjustment, and you have a little bit better rate for your property using AirDNA. Now, this one is not using AirDNA, whereas this one was using AirDNA or short-term rental data from either Airbnb, VRBO, or a combination of. This one only uses short-term rental data, not AirDNA, so you do notice that the rates are better. This one, 8.99 as the top rate, whereas the other one was 9.625 as the top rate, so almost 0.75% lower rate if all you need to use is the short-term rental data, which basically allows you to go 15% higher than the 1007. So there is a limit. They don't let you max it out to infinity. They'll let you use the short-term rental revenue report to increase your 1007 long-term rent by 15%. So it's not a blank check. So now we have our cash out option using AirDNA and short-term rental data. So, and this is actually at 75% LTV. You're looking at 9.375, offering a little bit of a lender credit, and you can buy it down all the way to 8.375. So this is no LTV adjustment. You're maxing out the DSCR for this option at 75%, whether you were using short-term rent or long-term rent. This one still maxes out at 75. No adjustment, so you're getting pretty good rates there at a 75%. So now we have some additional twists here, right? What do you do with the property that you want to use or the borrower wants to use for short-term rental where there are no comps nearby that are short-term rental comps, right? It's a purchase. They were not previously doing short-term rent, so the seller does not have any last 12 months revenue reports nor bank statements to be able to provide to the buyer. There are no AirDNA comps nearby. So the option that we would use here is our less than 1.0 DSCR option, right? This is for a 0.75 to a 0.99 DSCR purchase, keeping it at 75%. So the one drawback here is that you're not going to get the 80% LTV, but you are going to get pretty good numbers here on the rate. You're looking at 9.25 with a $563 lender credit, and you can buy that down all the way to 7.75. So the rates are just as good as the other option at 80. You just don't get 80%. You get 75%. And for that trophy property that's not cash flowing above 1.0, that you can't even get it to a 0.75, we do have a less than 0.75 property. Prime example of where this would come into play, that waterfront property is going to rent for $10,000 a night, but long-term rent might be 8,000, 9,000, 10,000 for the month, right? So you're not going to cash flow there. You may not have short-term rental comps or anything that you could use. So we can go to our less than 0.75 at a 70% max. So pretty good rates here. You got 9.875 with a little bit of a lender credit, and you can buy that down all the way to 7.99%. And we have a couple of cash out options using these same two programs. And I wanted to note that when we do use these two programs, one thing that's very unique about them is that they do not have an LTV reduction when you're going cash out. So the 0.75 to 0.99 DSCR option for purchase is also 75% LTV for the cash out. So very important for you all to consider. This is a 75% LTV cash out at a 0.75 to 0.99. So you do get 9.875 with a little bit of a lender credit, and you're going to buy that down all the way to 7.99%. And last but not least, on our less than 1.0 cash out option, again, you get the same LTV, 70% on the cash out as you do on the purchase. So less than 0.75 DSCR, you're going to cash it out to a 70%. And you're looking at 10.375 with a little bit of a lender credit, and you can buy that one down all the way to 8.125%. So as you see, a lot of ways to get creative with the DSCR loans due to the variety of guidelines that we have available. We can custom tailor the options to any borrower, whether there's long-term rent, short-term rent, cash out, rate and term, purchase, whatever they want to do, we have them covered.
All right, great stuff. Looks like we do have one question here from Owen, who's on our team. Do you have a video showing how to quote a DSCR short-term rental? Well, we do have videos in the training center and knowledge center, but there's really not going to be a difference between quoting a short-term rental and a regular DSCR. It's going to really be in the guidelines, right? Jose, is going to be where the difference is. You're going to quote them the same way. The guidelines is where you're going to see if the short-term rental income is going to be available to use, right?
Correct. There are, that's in the details of the guidelines when you're going to look at the eligible income streams, how they can apply it, what's allowed, what's not. In some cases, when it's a refi, some options require a lease, and if you don't have a lease, they reduce your LTV. So different things that you have to look for. And one of the main things when it's a short-term rental property is that and it's a refi, is that you do not have a lease in place. Usually there's not going to be a long-term rental lease. So be on the lookout for how the guidelines treat not having a lease. Are they going to hit you with an LTV adjustment? Are they even going to allow you to do it if you don't have a long-term lease?
All right. That was great. Again, something we specialize in. So if you want more info on that, visit themortgagecalculator.com. We're definitely experts on the non-QM and investor programs, just like the short-term rental property DSCR loans. We appreciate everybody tuning in and dropping comments, asking questions. Appreciate it. Remember, we do this show 11 a.m. Eastern time every single weekday where we go through the live rates and do a deep dive into a different topic. So we will be right back here tomorrow with a new topic. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we'll see everybody tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Have a great day, everybody.